Okay, Chapter 2, Analyzing Transactions, and this is Learning Outcome 6, Horizontal Analysis. Now, what we've done so far is now you know what accounts are used in businesses and how to set up a chart of accounts, the order that they're in and the reason they're in that order, and then you're able to journalize transactions using the double entry system. All right, and then describe how it's journalized and then updates the accounts. So then we know what balance we have in cash, for example, or how much we have in fixed assets. Now, this one, I took LO4 here. This is faded out because remember, you don't have to worry about trying to find errors in this stuff. What I wanted you to do is just really have a good handle on the accounts and how they, where they are in the financial statements. But now that you know all this stuff, you can do some interesting things, and we can use horizontal analysis to evaluate a company's performance and financial condition. Okay, it's just a start. So what this is you take each amount on the financial statement and you compare it with the same item on an earlier statement, and then you look at the percentage change. All right, it isn't, the whole number isn't going to tell you so much, but the percentage change will. Now here's an example. This is a service business. This guy's an attorney, and it has he's got fees earned year 1, 150, year 2, 187.50. The change in the account is $37,500, and that's 25% more income. Okay, but you can see here too that the wages went up, rent went up, utilities went up, supplies went down. Okay, and miscellaneous expense went up. So if you're going to have more income, chances are it's going to cost you more to make it. So his operating expenses increased by 30%. Okay, so revenue went up by 25%, operating expenses ate up a lot of it, went up by 30%, but still income went from $79,000 to $95,000. Okay, then that's the change. Then you divide it by the original year, by the 79, and that's a 19.9 or like a 20% increase in net income. Okay, so that's good information. But again, this is a made-up company. Here's another example of one. We've got these two income statements for this McCorkle company. This is out of your textbook. And again, we take the change between the 2 years. Then you take this $35,000 and divide it by the base year, all right, which is 2018. So we have a 20% increase in fee income, 15% increase in operating expenses, and net income, though, is increased by 50%? Yeah, because it's 12,500 divided by 25,000, a 50% increase in income. Okay, so that's how you do it. But here's kind of an interesting example. This is Nike from last year, and I got these numbers off Yahoo Finance. And Nike's income, if you just go to the bottom line here, you can see in 2019 they made $4,772 million, whereas in 2020 they made $3 billion. So they've got a 1.657 decrease in operating income, or a 35% decrease in income. And then when you look at the rest of the details here, you can see that revenue was down by 4%. Their costs also went down, but not by as much as revenue did. Okay, so gross profit is decreased by 7.1%. And this is also a merchandising company. We haven't talked about this yet, but we'll talk about it in the next chapter. But you can see now we've got revenue and cost of revenue. So if you're selling merchandise, you've got the selling price of the merchandise, but then the cost of the merchandise will give you gross profit. Okay, but it's pretty interesting here. Their operating expenses also went up. So in order to find out more here, you'd have to look more in depth at the company, but at least it starts pointing you toward where the problems are. Okay, so this is horizontal analysis. It's a one step in learning how to analyze a financial statement and just to see what's going on with the company. The other thing that this is good for is to compare it to other companies in the same industry. Like, for example, after the virus, we'll be able to see the effects of the virus in corporate financial statements for years. Okay, like if something happens to the economy, you can see it affected in all the companies. Okay.